Is the dragon taking off? I'm Edith from Property Bank, and 2024 is a dragon year. We are going to dive into the actionable insights for you for the commercial and industrial real estate in Singapore. Let's talk about the economy, which is closely linked to commercial and industrial property market. We know that there is geopolitical tensions, tightened credit conditions, and also inflation. However, Singapore's economic growth is expected to improve in 2024. Let's take a look at the Chinese New Year shopping mood as an indicator. You would have seen the queues in NTUC. Isn't that a positive indicator? So let's look at the chart here, which shows the positive rental growth comparing between 2023 and 2024. Starting off, we will see that for residential, a sharp decline as compared to last year, decline in terms of growth rates. For the logistics, retail and office, we see that they are relatively strong, especially for retail in terms of growth percentage and the office growth percentage. They are definitely strong in 2024. Commercial offices, we definitely see rental inquiries coming strong at the start of the year. Even though these tenants are looking out for space middle of the year, we do see them being cautiously optimistic for the second half. Most are looking forward to a brighter economic outlook, and this will unleash the pent-up demand from companies that's entering into Singapore, companies that are in professional services, fast-moving consumer products, non-bank financial and medical sectors. So this surge in 2024 will trigger off a new wave of flight to quality. So quality of the buildings matter. Let's take a look at our forecast. So for CBD Grade A, because of the flight to quality, you see the upward trend in terms of the rental values. And that's good news for the landlords. And next up, for opportunities to buy, definitely there are landlords who will be selling strata for the Grade A CBD office, so lots of opportunities. Moving on to non-Grade A CBD office, because of the uptrend in CBD offices in terms of the rental, the cascading effect would mean that the non-Grade A will move up in terms of rental. There are also tenants who are looking out to stay in CBD. However, because of the capital values, they will buy into the non-Grade A CBD offices. So there are resale opportunities there. Let's look at outside CBD, where the Grade A is because of tenants looking at decentralization. They will move into Grade A with the quality outside CBD, so definitely that will push the rents up. The capital values for the Grade A outside CBD, there are tenants who will be buying into the non-CBD area to enjoy the Grade A facilities. Coming to the non-Grade A outside CBD, we will see them stabilizing because some of these tenants will also compare with business parks where they can move on to, and there is certainly a very limited opportunity to buy in any non-Grade A outside CBD. So probably that will also means a plateau for the capital values. On to industrial. So we see that the supply crunch that drives 2023 for the logistics space will continue to have limited completions until 2025. That means to say that for 2024, for the warehousing space, it will remain limited. And that means the capital values and the rental will continue to surge upwards. As for the industrial space, let's look at this chart here. So the B1 and B2, we see that B1, because the light industrial, there is ample spaces, so we see them stabilizing. However, there are SME owners who look into buying instead of renting. So for the capital values, we see that a number of owners who actually have been holding the B1 space for a while, they are releasing out into the market. So that means an upward trend for the capital values. Coming to B2, which is the heavy industry, and that very often is also JTC type of factories. We do see the rents are upward trending because most of them, due to their functional requirement, they have to be in such locations and such specs of buildings. So only the neat and good ones will demand that, higher rental. And in terms of capital values, because of such B2 usually sitting on JTC plots do have a lease decay. That means to say that capital values will not be increasing and it will come stabilizing. So business parks, however, there is often a property that people will compare against office because of their outlying location in either Jurong or Changi. Well, we see the rental values stabilizing, and for business parks, most of them are already owned by REIT, so we don't see that many resale opportunities. Moving on to retail. So beginning of 2024, we already see two large retail assets for sale. That is Scotts Square and Midpoint Orchard. One is single owner and another one is made up of many strata owners. So let's also jump in to look at what has happened in Orchard retail for the rents, and Orchard is basically the benchmarking for retail. We see the rents that will be uptrend because most of the retailers, despite the difficult times, they are in to snap up the greatest location and position at the malls. And as I mentioned earlier about the capital values, we do see that the capital values will definitely go up as well because of the ample opportunities out there by these two large assets for sale. Let's also look at the suburban retail. So since COVID, we know that people are flocking to the suburban retail, and this is still the same as there is also people who are staying at home on hybrid work. So uptrend as well for suburban retail. And coming to the capital values, well, there is limited opportunities to buy, as we all know that Mercatus, which has made the headline news, has already sold their assets. On to the all-time favorite, shophouses. So it remains hot. In fact, this is one category that attracts many foreign buyers. Well, you and me may find it too expensive versus the strata units. But for the family offices, institutional buyers, the foreigners, they are definitely considering shophouses as bite size. So if you look at just in January itself, what has happened, 10 shophouses owned by 2 Chinese nationals linked to money laundering case has been put up by the market by DBS to recover payments of the loans, and that is valued at 100 million. And earlier on, 26th of Jan, 3 adjoining shophouses are also put up for sale at a guide price of 61.6 million. This shophouses is definitely an interesting category. Will our government be putting in measure spirit financing or anti-money laundering procedures on this sector? To sum up, I call this year 卧虎藏龙, which is crouching tiger, hidden dragon. And the dragon is about to fly. This being the dragon year, despite the interest rate remaining a deterrent, people will figure out where to find the money. And despite the GST from 8% to 9% in 2024, there are ways to get around it. So as a corporate decision maker, SME owner and investor, we hope that this video is useful for you. And if you need help on your property with regards to purchase, rental, or even selling your property, do reach us at 8333-1338. I'm Edith from Property Bank. See you in the next video.